Hey everyone, it's Dr. Joe here. Another Wealth Wednesday. We're talking about money, talking about funding your real estate ventures, and primarily through creative financing options. And that's the focus of today. You know, I've been spending quite a few sessions on raising money because for a lot of people, that is a stumbling block for them to actually get involved and take action in real estate. So I think it's appropriate for me to talk about that. And so this session today, we're going to focus on more the creative financing options, i.e., those options whereby it's different from going to a traditional bank, traditional lender. Your Fannie Mae, big box, you know, mega, um, mega bank, mega lending institution, and so on. So I'm kind of focusing more on those people who are either unable or unwilling to go to those institutions and want to go to more alternative funding sources for their real estate deals. So that's the focus of today. And as I said before, for a lot of people, that is a major stumbling block preventing them from actually getting involved in buying real estate. As usual, today we're going to have a Q&A session in about 20-25 minutes. So if you've got some questions pertaining to real estate, anything to do with real estate, either finding deals, funding deals, doing rehab, contractors, lending tenants, finding tenants, landlord-tenant relationship, anything to a real estate investor, we're going to have a Q&A Ask Dr. Joe session. And so please put your questions in the chat box, and I'll get to them in about 20-25 minutes. And for those people who want more one-on-one with me, then you can also book a one-on-one with me where we can do a deep dive in your personal situation and what's going on in your world, and maybe there's a problem, a challenge that you're facing, and you feel that I may be able to provide some insights. I had 2 sessions this week, really, really good. For those people who are kind of on the fence, they are really good sessions. They really are. I think everybody who's done one with me has been overwhelmed with the quality of the content and just being able to spend quality time with me where we can do a deep dive. So if you've got an issue, a challenge that you're facing, there's no need to try and figure it out yourself. There's no need to try and feel that you're the only one doing this. There's a pretty good chance I've faced that situation before, and I can probably shed some insights with you or for you, so that way you can get going to where you need to go to and therefore pull the trigger. So again, my goal for this year for Wealth Wednesday is to encourage more people, everybody really, to take action. It's good that you listen to the Wealth Wednesdays, but at some point you're going to have to take action, do a deal in order to achieve financial independence. You're not going to get financial independence by watching YouTube videos or TikTok videos or whatever it is. It's by taking action, buying a house, and just make it happen. That's just the way it is. So, but obviously on the journey to pulling the trigger, it's scary, it's intimidating, it's your own money on the line, and it's scary. And so I want you to know that I'm a resource available to you on this journey, so you don't have to go through alone, and and so on. So book a one-on-one with me if you feel that could be of assistance to you. I can guarantee you, based on the many I've done so far, you will not be disappointed. So let's get going today's session, funding real estate, your real estate, and talk about creative, situation and finance things. So the question, I suppose, is what are the best ways to finance your real estate investments without relying solely on traditional loans? What are some of the ways whereby you can, get deals done without having to go to a traditional bank, traditional lender, and so forth? So the real estate, as we all know, the market is very dynamic, it's very competitive, requiring you to kind of think outside the box sometimes, and especially as it pertains to financing approaches. So traditional loans, what I mean by that is, this two-foot way you have to go in and, fill out loan docs, provide all your, full documentation, your bank statements, pay stubs, W-2s, and tax returns, and all, do debt to income ratios and all that kind of stuff. That's the more traditional approach. And lenders only lend if you meet certain rigid terms, and they have qualification requirements that you have to meet. So if you're a round peg in a square hole or something, you won't fit in, then you're not going to get the money. So therefore, to bypass all that, you want more sort of creative ways or innovative ways, that can help you to get better terms, reduce upfront costs, and hopefully achieve financial independence through real estate investing. So therefore, mastering creative financing methods. And we're going to touch on things like seller financing, lease options, private money, hard money, and crowdfunding. If you can become familiar with those strategies, it can really significantly enhance your ability to build and expand your real estate portfolio. And so these strategies are not just for advanced investors. Whether you're a new investor, I think you can pursue some of these approaches and enter the market and start building, start taking action and things like that. So by understanding some of these methods we're going to cover today, hopefully you can avoid some of the, or at least navigate some of the complexities associated with real estate financing and so on. We're also going to provide some real life examples, situations that I've been involved with, and hopefully share some of my insights and lessons learned that I've had. And so whether you're a new investor, mid-level investor, or a seasoned investor, hopefully you'll gain some knowledge from today's session. So let's get going. The first one we're going to talk about is seller financing. And I know that's a term that's bandied around by a lot of people. And so we're going to kind of do, talk about that. What is seller financing and how do you go about it? So the question is, how can seller financing be a game changer, in terms of real estate investor? How can you use seller financing to help you, in the real estate arena? So seller financing I've done seller financing before. It can transform your approach to purchasing properties. So when I talk about seller financing, I'm talking about essentially the seller, the person that's selling you the house, is acting as a lender, providing you with a loan under agreed upon terms. So this method is particularly useful for investors who are struggling to meet stringent requirements by traditional lenders, and those looking to close a deal quickly. So one of the main advantages of seller financing is the flexibility it offers in terms of down payment, in terms of interest rates, in terms of repayment schedules. And there's a lot of flexibility, and you can negotiate that with the seller. And so it can be easier to negotiate the terms, and you can hopefully achieve a win-win. Subject to is a strategy which is essentially like seller financing, where you're taking over somebody else's payments, and so on. So subject to is one creative way of seller financing, and subject to is a term whereby you are buying the house, and instead of getting a new loan, you're buying the house subject to the existing financing. And I've done several of those subject tos, and it's not always easy trying to convince the seller to allow you to take over their financing. But there are benefits. Obviously, it allows you not to go out and take out a new loan, and sometimes the loan that's already in place is lower interest rates, especially now where interest rates have gone up. There are lower interest rates. Some of the terms are very, very good, and all you have to do essentially is provide, give something to the seller for their equity, and then you just take over the existing financing. So you just have to negotiate the terms, and it can be a win-win scenario, and I've done that several times before, and it's definitely something. Maybe I'll do a session on subject to and do a deeper dive into how that actually works, and how some of the pros and cons and some of the things that you need to look out for if you decide you want to go down that path. So it's really important whatever you do on seller financing, that the terms are, the agreement that you have with a seller is clear, and it's legally binding. I mean, they are offering you a loan. Essentially, you're taking over an existing loan, and so it must be clear as to roles and responsibilities and things like that. You should, I would suggest, seek legal advice and complete some thorough due diligence to make sure that you're entering this arrangement in a win-win scenario, and you're going to avoid hopefully some of the legal challenges that can result if you're not careful. So many successful investors have used seller financing to acquire a portfolio. So what are some of the action items that you can do as it pertains to seller financing? You can obviously, if you're going to go down that path, you need to draft clear, legally binding documents and agreements outlining all the terms and conditions that you and the seller have agreed to. You need to obviously conduct some due diligence on the property, and make sure that this makes sense for you and also makes sense for the seller. And you may want to consider using a real estate attorney to draft the documents and to make sure that all parties are protected. So the first one I've covered today is seller finance. And the second one, another creative way, is lease options. And lease options is kind of, some people call it, some people know it by rent to own, and so I've done some of those, and I've had some experiences with lease options. It hasn't really worked out well for me for various reasons. I've never had a situation whereby a renter actually buys the house. I've offered them to rent with the option to buy, but they never actually take up and buy the house for various reasons. So the question we're going to have on lease options is how do lease options provide flexibility for you as you pursue your real estate journey in terms of real estate investing? So what in the world is lease options or rent to own and things like that? So what they are is it allows you, I suppose it allows the tenants to rent a property with the option to buy it at a later date. Okay, so instead of having a traditional landlord-tenant relationship, you have the tenant has the option or the ability to buy the home at some future date, and typically it's at an agreed price. So this strategy can be particularly beneficial for investors who want to lock in a purchase price. So you want to lock in the purchase price while generating rental income. So it allows you to sell the house to a prospective tenant at a future price, and also in the meantime they are paying you rent, and so you have that consistent rental income. It gives the tenant or the prospective buyer time to improve their credit scores. It gives them time to secure financing. Also, it gives them time to kind of get more involved with the property, and it's almost like a try it before you buy it kind of thing. And that's how I position it. I've positioned it in the past. It kind of gives you the flexibility of, you're getting a better quality tenant, because this tenant hopefully, or at least, hopefully they will feel like at some point they'll own the house, which means that they'll probably take better care of the house. And from your perspective, you get a steady income. They usually are open to paying a little bit more for the rent versus just a regular market renter. As I said, they generally take better care of the property compared to a regular tenant, because one day they may decide to own the house. Because they stay longer, you have reductions in vacancies, and you have the reduction in turnover rates, and so on. So there are strategies to be successful in this lease option space. So it's important to clearly define the option period. How long does the tenant have before they lose the right to purchase? It could be 1 year, 2 years, 3 years, N year, whatever it is. You got to define that. You got to agree on the purchase price, and also you want to agree on, because sometimes the way rent to own is a certain portion of the rent that they collect gets sort of assigned to a potential down payment. So so they can start building down payment monies. So you have to agree on how much of each payment is credited towards the down payment. And again, I've tried that for various reasons. None of my prospective renters have decided to buy the house. Things happen. They go in there with the intent to buy, but life happens. They lose their job, they want to move somewhere else, or they just don't have the option money, and so they end up remaining as a tenant. So in terms of action items pertaining to lease options or rent to own. If you're gonna enter this space, you want to obviously clearly define the option period and the purchase prices in the agreement. You want to ensure that the lease payments, certain portions of the rent goes towards the purchase price and or the down payment, and you want to obviously regularly communicate with the tenant to find out their intent to buy the home. Okay, so that's number 2. Number 3 is going to be about private money, another creative way, private money. And that's a term which I've been able to use for the last several years quite effectively in building my properties or portfolio anyway, is private money. And that's something which a lot of people are scared of. The whole idea of approaching individuals, people, friends, family, relationships, associates, about them borrowing you money. So the question is, how can private money accelerate your real estate investment growth? How can you leverage private money to grow your portfolio? So let's just go to the basics first. So private money involves borrowing money or funds from an individual rather than a traditional financial institutions. Okay, so these loans, because it's individuals, there's a lot more flexibility, especially in terms of the term, the length, and how that money is going to be used or what's it going to be deployed for. Private money lenders can be friends, family, wealthy individuals seeking a better return on their investment. Many times people just have, I don't know, got some money sitting in Bank of America, 0.1% or 1% or whatever it is, and you can offer them 5, 6, 7, 8%. So it's a better return for them, and also allows you to be able to tap into funds at better rates and better terms than going to a bank, and less hoops that you have to go through. So the primary benefit of private money is in terms of flexibility. It can provide you with the capital that you need to seize an opportunity. A deal comes quickly without the lengthy approval processes of traditional lenders. Additionally, private money loans can be structured creatively with interest-only payments, balloon payments, or other arrangement types that suit both parties. However, it's not always easy. It does require you to seek and obtain trust with other people. You have to build trust. People aren't just going to give you money unless they know you, trust you, believe that you're going to be a good steward of their hard-earned money, and that you're going to do the right thing and return the money back as agreed. So it does require you to build and establish trust with people. You got to be able to share with them what you're going to do. You have to have integrity, because no one's going to give money to someone who they feel could run off with their money. And so you have to cultivate relationships. It does take time. The best time to start cultivating those relationships is now, rather than when you've got a deal and you need to get it funded immediately. Because it takes time, and so you have to have transparency and a lot of different things. But it's definitely a good strategy. I've used it quite effectively for the last several years, and that's what's allowed me to purchase many of my homes and so on. So what are some of the action items pertaining to private money? Things like you need to start building a network of potential private lenders. Prepare a compelling pitch, or why should people borrow you money? Why should people lend you anything? And so you have to have that. And you need to decide on what the terms and conditions to protect you and also the lender in any arrangement that you have. So that's number 3, which is private money. So again, I'm going to go down to Q&A very, very shortly. If you've got some questions, please put them in the chat box, and I will get to them very, very shortly. And again, if you've got some questions, anything that if you've got some a situation or problem that you're facing, feel free to book a one-on-one with me. Again, these sessions are really good. I'm not just saying that, but they're really good. I've had several of those now. I had two last couple of days, and the feedback I'm getting are people are very, very appreciative, and it's helped them overcome some challenges, problems, and situations that they're facing. So feel free to book a one-on-one with me. You can go to my website, www.joeasamoah.com, and do it there. So number 4 is hard money loans. I think a lot of people have heard about hard money. And so what we're going to talk about here, what are the benefits of risks, benefits, the pros and cons of using hard money loans for your real estate investments. That's what we're going to talk about next. So hard money, what is hard money? These are essentially short-term loans secured by real estate, often used by investors for quick acquisitions. You need to move fast, and also for renovations as well. These loans are typically provided by private investors or companies. They call them hard money lenders, who are in the business of doing this. Typically, the interest rates are a lot higher than what you get from banks, and but they can move fast. They can usually close in a few days or a couple of weeks. So if speed is important, then you may want to explore hard money. I've used hard money before on a couple of occasions. There are pros and cons, obviously. But sometimes, I know for a deal that we did, we had to close in 3 days. And so I had to use a hard money lender, because if I went to a traditional lender, it'll take about 2 to 3 weeks. And there just wasn't enough time for that. So the main benefit of hard money loans is, it's the ability to move fast, ability for the lender to settle quickly, and which can be really, especially in a competitive environment. But as I said, the downside is that it costs more, it's higher cost. The loans are more short term, maybe 6 months or a year, as opposed to 1, 5, 10, 15, 20 years, which means that you have to have a clear exit strategy, such as selling the house or refinancing to repay the loan. Successful investors use hard money on several situations. One is like bridge financing. You got some money, you don't have enough, and so you need something else to top up the difference. They usually typically used if there's renovations involved, especially to buy a house that needs a lot of work, and which means that you need to have a renovation plan. And so you rehab it to hopefully drive up the cost, drive up the value of the home. And so, as part of the BRRRR strategy, for example, you buy it typically with hard money, you renovate it typically with hard money, and then you refinance based on the improved value, increased value, I suppose, of the house. And that then allows you to pay off the short-term financing and replace that with permanent financing. So you got to know a bit more about what you do, and otherwise you could be saddled with a loan with high interest, and you could have some problems trying to get it out. So what are some of the action items associated with hard money lending or hard money loans? You need to evaluate the cost of the loan versus the benefits. So look at things like the interest rates and the fees. They are more expensive. Develop a detailed plan if you're going to go this route of your renovations, and also the sale or the refinancing of the property once everything is done. And you need to have a plan. You need to have a reliable timeline to repay the loan within the term that the lender has. Okay, so that's number 4. Number 5 is crowdfunding. Now, this is a strategy I haven't personally used, but I thought I'll put it in there just for completeness. It is creative. It's something different. And so the question is, how can real estate crowdfunding open new doors for investors like you and I? So what is crowdfunding? Crowdfunding, there are various crowdfunding platforms which allows investors to pool their resources and invest in larger projects. So you may have a little bit of money, but not enough to do a deal. And so what crowdfunding allows people to do is to pool their money. So money from you, money from somebody else, a whole bunch of different sources, pool their money, and then those funds are then used to purchase and properties, real estate. Okay, and so some people say it's like it's sort of democratize real estate investing, making it accessible to individuals. So individuals can now do deals, big deals, it could be commercial projects, multifamily projects, which you otherwise would not be able to do by yourself. But if you can pool your money with other people's money together, they can then be able to buy these larger projects. Okay, so it allows individuals to invest independently in order to acquire a larger portfolio. So by participating in crowdfunding, investors can diversify their portfolio. They can sort of expand to different sectors like industrial, office, or multifamily or residential financing, or whatever it is. You can diversify your portfolio, and you can access larger, maybe more profitable, or maybe higher quality projects, and you can leverage the experiences of other people as well, other developers. So crowdfunding offers obviously several advantages, including lower entry barriers. You don't need a lot of money. Some of them it could be as little as $100 or $1,000 just to get in. And obviously with $100 or $1,000, there's no way you can buy a commercial building with that. So the cost of entry is a lot less. You can diversify your portfolio into other sectors, and you can benefit from, especially on larger deals, professional management as well. But like all things, buyer beware. It's important that you do your due diligence. It's important that you check out, research the platform that you're going in, understand the risks associated with crowdfunding, and there's quite a few sources out there, and they have different fee structures. They do different project types, and you obviously need to understand the risk profiles of these projects. So successful investors have used crowdfunding to gain exposure to different market segments and asset classes, so enhancing their portfolio and resilience as well as that. And by understanding the nuances of each platform, you can therefore make a decision as to which one makes the most sense for you, given where you are, and you can make what I call informed decisions. So what are some of the action items associated with crowdfunding? Research and choose reputable crowdfunding platforms. Do your due diligence. Review the project details if you're going to invest, and look at the developer's track record. What's their experience? Have they done this before? What's their track record? Check them out. And obviously you want to diversify your investments over multiple projects rather than putting it in one basket. You can spread it over multiple projects, and therefore spread your risk around. And then finally, kind of combining financing strategies, kind of put it all together. I'll talk about that briefly. So the question is, how can you effectively combine different financing strategies for maximum impact? So what I'm saying here is that you may be able to do a mixture, some seller financing with some hard money financing versus crowdfunding versus hard money and so on. You can mix them up a little bit. So combining multiple financing strategies can provide the flexibility and capital needed to grow your real estate portfolio rapidly. For instance, an investor may use hard money for the initial loan, for the acquisition renovation, and then you may refinance to a traditional loan afterwards once the property's value has increased in value. So what this does, it optimizes your cash flow, minimizing cost and providing you with maximum benefits and returns. So successful real estate investors have strategically mixed their financing methods and adapt based on what phase they are, what stage they are in the project. So it gives you the opportunity to seize opportunities when they arise, manage risks, and navigate different markets and so on. So financing, especially creative financing, is really a strategy which you can pursue, and it does make sense, and so on. So let's kind of wrap it up. Let's have a look. It's now 7:32, so we're going to go to Q&A in a couple of minutes. So let me just wrap this up. Conclusion. So how can mastering creative finances options transform your real estate investment journey? In today's competitive environment, mastering creative financing, in my opinion, is essential. to expand your investment portfolio and achieving financial independence. Not everybody has the ability to get a traditional loan, but you do need money to do deals, and therefore it's important that you understand the different types of creative financing. So by understanding and utilizing strategies that we discussed today, such as seller financing, such as lease options, private money, hard money, crowdfunding, you can sort of unlock new opportunities and mitigate risk and hopefully ensure your long-term success. So implementing these techniques requires careful planning, due diligence, and a willingness to learn from both successful and setbacks that other people have faced. And so by following some of the actionable items that I've talked about today in today's live stream, hopefully you can navigate some of the complexities of financing and build a more sort of robust and profitable, hopefully, portfolio. So continuous education is important, networking is important, and your ability to adapt is also very important. But it allows you to stay ahead of the curve. And hopefully today I've been able to share with you some good ideas for seller financing, creative financing, and so forth. So with that said and done, I'm going to go to Q&A. Let's see if I can do that. Here we are, and I'll do my best to answer your question. If you've got some questions, again, please put them in the chat box, and I'll try to answer them as soon as I can. And also, if you want to book a one-on-one with me, well, if you want to send me an email, you can reach me at joe@joeasamoah.com. Shoot me an email at joe@joeasamoah.com. And if you want to book a one-on-one with me, where we can deep dive in your situation, any question that you have, you can book a session with me at www.joeasamoah.com, www.joeasamoah.com. And so let's get down to the Q&A for today. What do we have? Aman. Hey, Aman, how you doing? Dr. Joe Funding is so I need to hear this. Hello, Dr. Joe Funding it, kicking my butt. So you're having a hard time, man. So hopefully I've been able to share with you some ideas. Let me know what are the problems you're facing. Throw it out there and I'll see what I can do to give you some insights. So greetings from Phoenix from Dow 2. How you doing? I hope you're doing well today. Faris Suleiman, Chicago real estate broker. Okay, this is Chicago's in the house. So, hello, Dr. Joe. I'm a realtor in Illinois. Happy to help anyone in real estate in Illinois. No problem. If you're in Illinois, I'm not too sure which part of Illinois you're in, Fares. Let me know, and I'll see if we can try and get you some business. Dow 2. I have a non-voucher holder tenant. A non-voucher holder tenant. Okay, this must be a market renter who has not paid rent yet. Okay, Today is the last day of the month. I would rather not evict this tenant. I have contacted her twice, but haven't received any response. So, okay, you got somebody who's not a voucher holder, looks like a market renter, and she hasn't paid her rent and for the month of July, and we're now moving into August tomorrow, and your preference is not to evict her. You contacted her, she's dodging you, she's not responding to your messages, so let's see what else she has. So I will reach out again on August the 1st. I don't like anyone to go into a new month without the previous month. Okay, so far so good. So your question is, I don't know what your question is. So maybe you want to throw your question down too. So I suppose it's going to be what should I do? So what would you do? I'm going to throw it out there for everybody. You got a tenant who hasn't paid you the month of July. We're now moving to August tomorrow. She's not responding to your calls. She obviously either doesn't want to pay you or cannot pay you, so what do you do? Depending on where you are, I would suggest, also depends on your relationship with the tenant. If this is a tenant that has been there a long time and they may have just, going through some hard times, then, you can try to work with them. You can find out if there are any organizations locally that can assist with rent. You can try to communicate with them to let them know that you're concerned. I think you need to have a plan B, which is to evict if necessary. So you need to understand what the local laws are where you are in terms of the notices that you have to provide, the verbiage that must be in the notice, And if you feel comfortable doing it yourself, fine. If you don't feel comfortable, you may want to seek legal counsel from an attorney. Some states it's relatively easy to go through the process. Other places it's very complicated. In Washington D.C., for example, it's kind of complicated, so it's not always a good idea to go in by yourself if you don't know. I've got some properties in Maryland. They're pretty straightforward. So in Maryland, if and when I have to do that, I usually just do it myself. So again, it just depends on the local laws. So again, I'll try to reach out to the tenant, try to understand the situation, show some grace, show some empathy if necessary. But if you got to do what you got to do, then you have to file paperwork with the legal system. That means they'll let them know that you're serious. And if you can do it yourself, fine. If you can't, then make sure that you get solid counsel. But it's important that you know what the laws are in your state and also in your local jurisdiction, especially as it pertains to notices, the verbiage that must be in notices, the do's and don'ts, licensing. I know in Washington, D.C. and also in some parts of Maryland, you can't even start the eviction process unless you're licensed, you're registered with the state. And so if you don't have the license, then your case could be kicked out just by a technicality. So make sure that you understand what the rules are where you are, and then you can pursue accordingly. So hopefully that was helpful, Dao too. Yeah, let us know next week how you're doing, and any progress that you're making. Melissa. Hey Melissa, how's it going? Oh, you're back in town from Honduras. Okay, welcome back. I hope that you're making progress on your deals in Cleveland, I think it is, the Cleveland area. So Melissa is looking to buy a couple of houses up in the Cleveland area. She had something in Denver, and now she's trying to build a portfolio outside of the Denver area, I think in the Cleveland area, Cleveland, Ohio. She's taking action. It's not easy, Melissa, as you know, but it can be done. So give me an update. Let me know how you're doing, and feel free to book a one-on-one if you feel I can be of further assistance to you. Reddy, thank you for a great session, Dr. Joe. Always insightful. Yeah, my pleasure, Reddy. Hope you're doing well wherever you're tuning in from. Okay, where can I find crowdfunding projects? This is from Charmaine. I would suggest, I haven't done crowdfunding before, that's full disclosure, but I wanted to add it into today's session because it is creative. It's a new strategy whereby you can pull resources to purchase deals that you otherwise would not be able to do. There are quite a few crowdfunding platforms. So what I would do would be to do some research, do some due diligence, do a Google search, maybe go to some forums and speak to other investors who have gone down that path, and they can share with you their experiences. Maybe they can give you some recommendations. I'm not in a position to recommend which platforms or which projects to go with, because I haven't done it. I'm not an expert in that area, but I think there are quite a few crowdfunding platforms out there. And so I will do some due diligence and then decide which one makes the most sense to you, given the specifics of your situation. Okay, Charmaine, where do I find? Okay, I think I've just answered that question, Charmaine. Yes, so hopefully that was helpful. Financial firefighter, hey, how's it going? Welcome from Hawaii. Aloha. Katie. At Fair, are you city or burbs? Katie Bebel at Fairs, Suleiman. Okay, now what was the question that? Okay, so Katie is a real estate broker from Chicago area. Okay, so that's the reason why. Okay, so she said, so this if you're in the Chicago area, Illinois area, this is how you can reach Katie at Faraz Solomon. Are you city or burbs? Is that a question to me? If it is, I'm not too sure the context. So let's have a look what she says here. Hi, Dr. Joe. What was your source of financing for your first housing choice voucher investment property. Did you encounter any pushback from lenders regarding Section 8, or was the subsidized rent considered a boon? The first house that I bought, and I used Section 8, so what I did, I bought a house like most people do. I renovated the house like most people do. And then when it came down to renting, I just happened to select a tenant who had a voucher. So I didn't buy the house for Section 8. I bought the house as a regular investment property. And I decided to use or to rent to a Section 8 voucher holder. And so when I refinance, what I do is to make sure I have a lease in place. So I wasn't living there. This is a rental investment property. So when you are getting a loan on a rental property, the lender wants to know, well, okay, is this place being rented? Is there a lease in place? And they want to look at the lease, and then from that they'll determine the cash flow, and they'll determine how much they'll borrow you, and so on. So that's what happened to here. Over here, I sell the Section 8 program because it's a reliable income stream. There are lenders out here who, they understand the Section 8 program. They understand that it's guaranteed rent. They understand that tenants tend to stay a long time. And so I have a track record. I've got documentation. I've got, I can tell a story that if you were to borrow me the money, here's a lease. Part of that money is guaranteed. And so I haven't really had any difficulty with lenders when I have a property that has a Section 8 tenant that is renting from me. Okay, so because all the lender is concerned about is essentially at the end of it, are you going to pay the money back? And so if you can show them the Section 8 contract, they call it the HAP contract, HAP, Housing Assistance Program contract, then that's usually good. It's very, very reliable income stream, which is what they want. And also, at least you can be strategic in the sense that voucher rents, in many cases, at least around here, you can do it in such a way where you get more money from the Section 8 program than you'll get from market renters, especially given the fact that your rent is based on the number of bedrooms in the property. So if you add more bedrooms, you can get higher rents. So if you have a 3-bedroom and you make it into a 4 or a 5, you can get more rent than you would if you left it as a 3-bedroom. Hopefully that makes sense. Yes, sir. What would you do? She has been there since 2018. Okay, so I think Dow 2 is giving us more context. What would you do? So he's got a tenant who's been there since 2018, so a good 6 years. And I'm assuming for the last 6 years she's been paying her rent, and she, for whatever reason, can't pay you this month of July, and you're trying to figure out what you do. So she's been there 6 years. Hopefully she's taking care of the property. Hopefully, you're not having any drama and so on. So you have to make a business decision. Do you want to, work with her or him? Or do you want to say, hey, you can't pay, you got to go, which means that you go through the legal process? I will try to work with them because, but also have a backup, which is understanding the legal process and get that ball in motion. Some jurisdictions, the legal process takes a few days or a few weeks. Others takes months and years to get somebody out. So if you're in a jurisdiction where it takes a long, long time, you need to start that process as soon as possible. You need to educate yourself as to the rules, the do's and don'ts. I would say if you got some time, go down to the landlord-tenant court where you are and just sit in the back of the room and listen to stories. See how it works. See what some of the, cutting-edge excuses from tenants are. Know how to navigate that whole legal minefield. Is it easy? Is it difficult? Is it challenging? And so on. So you want to kind of get yourself, prepared and knowledgeable about the legal process before you start. If you're not comfortable, then you may want to consider getting some legal advice from an attorney or whatever. But I will try to work with them, Dow 2, if possible, since they've been there 6 years. But I would also be aware of the legal process and get that ready if necessary. When I say work with them, there could be organizations in your area that do pay rental assistance for those people who are hitting hard times. And but you know, if it's worthwhile to work with them, if it's not, then you do what you got to do. So hopefully that was helpful. Melissa, okay. 2 duplexes in Cleveland. Today was closing day for one. Okay, congratulations. But I only got builder's risk insurance today, so closing is postponed. Okay, I only got builder. Okay, my new GC has to get himself registered with the city of Shaker Heights. Okay, so I think sounds like you got. I think yeah, you're doing 2 projects in the Cleveland area. I recall, and sounds like you closed on one of them today. Congratulations. But I only got builder's risk today, so normally you can't close unless you have insurance. You can't buy a house, especially if you have a loan on it, without having insurance. So when you're buying a house, especially a house that you go, what's it called, needs work, and it's a vacant house, then typically you need to get what we call builder's risk insurance. It's kind of vacant property insurance, and it's not cheap, but it's the kind of insurance that you need. You can't get a homeowner's insurance policy because you're not living there. You can't get a renter's policy, a landlord's policy, because there's no tenant there. So you have to get what we call a builder's risk insurance, and that's what it sounds like you got for one of them. And the GC has to get himself registered with the city of Shaker Heights. Why does the GC have to get registered? I'm not sure about that one. The city flagged this property with safety items, and the GC has to. Okay, I get it now. Has to register and get the SOW approved. Then we close. Okay, so it sounds like this property has some issues in the past. Maybe it was condemned. Maybe it was cited. It sounds like there was some safety issues that was flagged, and therefore, in order to to get those flags removed, you have to provide the city with your statement of work, what you intend to do with this property, get that approved, and once they approve it, then it sounds like you can get financing and get it closed. So the other duplexes closes Monday. So okay, good. So thanks for keeping me updated, Melissa. And I know it's going to be a journey, but I think you can do. I think you're doing fine. I applaud you. Again, I'm a resource available to you if you ever have any questions or you want to kind of run out some scenarios with me. Hey, Marlon. Hey, Marlon. Good afternoon, Marlon. Hope you're doing well. Marlon's a local real estate investor. I think he's in the Baltimore area now. He used to be in the DC area. So kudos to Marlon. Let me know how you're doing, Marlon, if you've got any deals that you're doing. Are you going to PBCon? I suppose that's bigger. BPCon, I suppose, in Cancun. I will not be going to BPCon this year. I'm going to East Africa, in fact, next week. I'm going to be gone for 3.5 weeks. And then I'm probably going to Ghana again this year. So I will not be going to BPCon this year in Cancun. I was in Cancun last year, in fact, for a wedding. And I was in, what was the other place in Mexico? Cozumel. Earlier this year, also in Jamaica and the Cayman Islands. I am doing a lot more traveling now, but I will not be going to PPCon this year. So maybe another time, Melissa. Okay, it's extremely difficult to get builder's risk right now. Okay, well, I would say, well, I don't know. I don't know about your area, but I have an insurance agent who I'm able to get builder's risk my policies. I know it's not cheap, but yeah, so I suppose you're going to have to keep looking because you're going to need the policy if you're going to borrow money from a lender. Joel, cool. Thank you for this great session. In my quick question is, what is the best approach to buy a house off market if I have such leads? Okay, so what is the best approach to buy a house off market if I have such leads? Okay, so I think I understand. So you're saying that you've seen a house off market and you want to buy it, and you got a lead and you want to go for it. So what's the best way of doing it? If it's off property, then there's usually not a whole lot of competition. So I would definitely speak to the owner, find out their situation. What's prompting them to sell? Is time important where they need to get rid of this thing real fast? What's the condition of the house, the property? What's their situation? How much do they want? Are they flexible in terms of price, terms, and things like that? Are they open to seller financing or not? So these are the questions that you want to do as part of your due diligence. How much work needs to be done? What's the after repair value, ARV? What do you have to do to get that ARV to the property? Do you have a contractor so you can maybe get a quote? And then how are you going to finance this thing? Are you going to get hard money? Are you going to get traditional financing? Are you going to use some of the strategies that we discussed today? And so on. So these are some of the things that I would do to approach, talk to the seller. Do a search, skip tracing search to track the seller down, talk to them, and understand their situation, and see if you can cut a deal. If you can cut a deal, all power to you. Obviously, you want to have your financing in place, because if you cut a deal with the owner and they're ready to roll, you need to have the financing. Otherwise, you can't execute. If you can't execute, then obviously you may want to go to somebody else. Maybe wholesale the deal to another investor, or just go to the next one. So that's how, in a quick session, I would proceed, Joel. This will be a good one for us to do a one-on-one. So if you want to book a one-on-one with me, we can kind of do a deep dive, so I can really understand your situation and maybe sort of give you some more detailed advice and suggestions and action plans and next steps and so on. So Joel, if you want to, you feel free to book a one-on-one with me. You can always go to my website, www.joeasamoah.com, and I think it's this one. I think this website. Book a one-on-one. Go to www.joeasamoah.com, and we can do a one-on-one with you there. Okay, let's keep going. Marlon, doing great. Closed on another property. Okay, good. Congratulations. Congratulations, Marlon. Let me know where the property is located, and very happy for you. And keep me posted. Good for you. Katie, when did you start utilizing private funding? Was it challenging to seal the deal when pitching your investment plan, seeing as you'd not yet established a history with HGCV property? Yes. I started using private money, that's probably 8 to 10 years ago. I was surprised. I was very scared to do it. I was, I suppose just afraid that, why would anybody borrow me money? But I reached the point whereby if I wanted to expand my portfolio, I would run out my own money. And so I was advised to consider private money. And obviously, in order to do that, I had to do some research. And essentially, what it boils down to is I realized that anyone that's going to borrow me money wants to know 6 things. Okay? They want to know who am I? What do I do? What makes me different than other people? How much money do I want from them? They want to know. And they also want to know, well, okay, if I borrow you the money, then how are you going to protect my money? And then they also want to know is why should they do business with you? So this is what they want to know. And therefore, I had to put together some materials to explain those things, and a story as to who I am, my track record, and why they should invest with me. We're in the days of Madoff. People are worried. People are afraid that you're going to rip them off. You're going to run off with their money. So you've got to demonstrate integrity. You've got to have a reputation. Otherwise, they're not going to do it. It doesn't matter what you offer them. If they don't trust you, they're not going to give you a dime. So you've got to build all that. And it does take time, but it can be done. And I reached the point where I had quite a lot of potential private investors, and that's what allowed me to start buying houses. Because in this area, in the DC area, you're talking $400,000, $500,000, $600,000, $700,000 just to buy houses. It's not cheap, and then on top of that, you have to renovate, so it gets kind of expensive. So if you're using your own money, at some point you're going to run out. So it's really important to explore private money. It does take time, so you may want to start looking and learning about that, how to do that. Again, if you want to, we can do a deep dive for anybody who's interested in raising private money. I've got a lot of experience in that one. We can do so we can do a one-on-one if that will be of assistance too. So book a one-on-one with me, and for anybody, not just you, Katie, but anybody else here who feels that financing is a big deal, and they want to have some of the insights which I have. Okay, Joel, thank you. What's the time now? Oh my God, it's 8 o'clock. So we're going to wrap it up now. What do you have your PhD in? I have my PhD in information systems. I'm an IT and business guy. I have an electrical engineering degree, a bachelor's degree, and so I did engineering, and I was in England at that time. They created a PhD program where the first year you do an MBA. So that's what exposed me to business, and that was probably the best thing I ever did, was that MBA. And then I did a PhD, the research project to get the PhD at the end. So that's what I did. It was on the topic called business process reengineering. How do you organize companies, and put new technology, new systems in to make them more efficient. That's what I did, and I did that. In the U.S. As they say, the rest is history. So that's a bit my background. Maybe I'll do one session on me, because I think a lot of people don't know more about me, what I do, and things like that. But it's all good. It's 8 o'clock, my friends. Hope today's session was a good one. If you have any more questions, feel free to email me, book a one-on-one with me, or let's meet next Thursday. Next Wednesday, will be the last one I'll be doing live, because I'll be going on vacation for 3.5 weeks. I'll be overseas. I'm going to Tanzania, I'm going to Uganda, and I'm going to Kenya. We're going to the safaris, the Serengeti. We're going to Zanzibar. It's a 14-hour trip from here to Doha in Qatar. And then from Qatar, we're going to Uganda and Entebbe. And then we'll be enjoying ourselves. So that's what I'm going to be doing for the next few weeks. And next week I'll be here. Let's do another Wealth Wednesday, 7 o'clock Eastern time. I will see you then. Have yourself a wonderful evening. Take care. Bye for now.